Hello, and welcome back to another episode of Do More with Your Money. On today's episode, I'm joined by James Vanreusel. James is the founder and CEO of Vanreusel Ventures, a CFO consulting firm that helps mission-driven companies grow and scale. Originally from Belgium, James has worked around the world in finance, from Wall Street to the South Pacific, holding roles in investment banking, private equity, and corporate finance. He's helped launch microfinance banks, build international financial systems, and support both for-profit and nonprofit organizations with global reach. Now based in San Francisco, James and his team focus on helping CEOs develop the financial tools and mindset they need to lead successful organizations. Outside of work, he's a dedicated dad of twins and a lifelong tennis competitor, still playing at a national level. James, thanks for coming on Do More with Your Money.
No, thank you. It's a pleasure to be here.
So I'm looking forward to our conversation today. Obviously, you bring a ton of experience in different environments, different financial positions. So I'd love to just talk to you first. Like, for those who might not be familiar, what exactly does a CFO, Chief Financial Officer, do?
So what do we do? That's a great question. So we are really, I would say, the strategists, the financial strategists and leaders of organizations. And so we make sure that a few things: the company doesn't run out of money, there's no fraud, there's good internal controls, you pass your audit, you are a thinking partner for the CEO around anything financial, and you'll help with fundraising, due diligence work, and all of those great stuff. And if it's a company that's scaling and growing inorganically as well, you'll be involved with mergers and acquisitions.
Okay, so exactly like what level would you come in and work with them, like as far as in their business journey?
Yeah. So when it comes to, so there's on the for-profit side, there's two types of companies, right, that I see. There's kind of the VC startup company, and usually we come in around the Series A when the company is getting to product market fit. They're starting to raise larger amounts of money. And I feel like I can add a lot more value as well. On a bootstrapped company, basically you are generating your own cash flow and growing with that. Usually what I see is, a business owner has spent the last, let's say, 10 years perfecting his or her model, throwing off cash. They're profitable now, but maybe they've had a bookkeeper for 10 years and now they want to grow from 3 to 5 million in revenue to 30 to 50 in the next 5 years and sell the company. And so how do they create that platform to scale, to raise funding, and then to exit?
Okay, that's interesting. And so are you working, so this is just at the business level, this is not
Yeah.
at the individual level.
Correct. Yeah.
Okay,
Yeah.
understood. Would you say, are there any things that maybe translate from, working
Yeah.
at the business level to the individual level?
Yeah, absolutely. So some of the things that I'll look at as well, especially when there's a sale, is if it's a C corp, there's something called QSBS, qualified small business stock, which basically you should talk to your CPA or attorney about. But basically, there are some rules in place that if you have QSBS, that you will get a major, major, major tax break on the sale. And it's something you definitely want to invest in and get good advice on. So, there is the idea of we're not just selling the company for this for the investors. We're also selling it for the business owner, for the founder, for the people who are working in the business. So there is definitely a individual component. The CFO will also be heavily involved with stock options, restricted stock units. Are they ISOs or NSOs? Some of this is more technical. So I definitely learn about them because it makes a huge impact down the road. But those are things that CFOs look at as well. So it's not just how is the organization doing that employs the CFO, but you're also really trying to help the people out that are doing all the work.
Right. No, that makes sense. And I actually tend to work with people with equity compensation, more so employees, but maybe they do have stock options or they had some kind of liquidity event. And it's like, okay, how are we going to use this money now to maybe, create an income stream? You're living off of it. You're taking time off from work. You're doing all these things. I mean, in your experience, like working with, these businesses and these founders, is their goal a lot of times to kind of have an exit strategy, or are they looking to build it as big as possible? Or are they trying to, they get to a point and they're like, I can't keep scaling this and I need to, look for outside help? What is the main mindset that you're seeing there?
Yeah, I think I think most of the time founders start and they don't have an exit strategy in place. Those are usually the bootstrapped companies. The VC backed companies, because you're getting VC money, there is that 7 to 10 year exit plan at the beginning. But I would say the majority of companies do not IPO. They sell. And that idea of how do I monetize my business really happens down the road when the owner says, they're either tired, they're looking to retire, they want to do something else. That's when the whole transition happens. And usually, you should give yourself at least 3 years, if not 5 years, before you sell the company, because there's a lot of prep work that has to be done.
Yeah. Like, what are some things that you look to do to kind of, add value to that as far as maybe making the company, more valuable or some inefficiencies there? Like, what are some common things that these businesses aren't taking advantage of?
Yeah, so I think at the individual level, years before you want to sell, go to a tax accountant and or a corporate attorney and just say, do I have the right entity structure? Should I have an S corp? Should I have a C corp? Should I have an LLC? Because you can change, in advance. And like I was talking about QSBS, I think you need to have 5 years of being a C corp to qualify, but it makes a significant difference. So that's kind of one of the first things you want to do. And then usually it's something, one of the last things people look at. So that's one thing. And then, there's a whole list of, how do I increase the valuation of my company? Checklists out there, Chat GPT is a good barometer, but that's, something that a good operator, not necessarily a CFO even can help with.
Okay, that's interesting. And I'm learning too, because I'm not too familiar exactly with what, a CFO does. And so you mentioned like ChatGPT, where do you see this headed as far as like your value proposition and like what is the judgment there as far as where the value comes in?
Yeah. Lots of conversations now about which apps do we use? How do we use them? How do we, get the whole organization working better and more efficiently? And sometimes it's just how do we get people just to write more emails using ChatGPT? But I think on the finance side, if you can get the private version, it's very easy to upload financials, just get reports spat out that are really valuable. But I think the CFO is still the quarterback. He or she is still figuring out the accounting, the due diligence, the fundraising. It's really everything has to work together to make the company successful.
I like that because I also, refer to kind of financial planner as like the quarterback of the client individual, financial life as far as putting the pieces together. And I think it's a great way to look at it as far as, these are just tools that we can help add more value and focus more on the stuff that can't be automated away. So these are just ways to really add value to the client experience. And on that same level, I guess, if you're thinking about for yourself, right, you're somebody that obviously works with as a CFO taking things off people's plate. If you had to run your personal life like a startup, what would your first hire be and why?
The first hire is always I think the executive assistant who's going to take all the admin off your plate so you can do the higher value work. So just the day-to-day stuff of running a household or doing personal finances. I have a fractional business, but I also hire a lot of fractional people. So for instance, in my personal life, I have a financial planner. I've had one since 2003, I think, when I was working on Wall Street. And back then, everybody was saying, why do you need a financial planner with everything you know? And it's just, I'm focused on my work, not necessarily the personal finances, but also I just know, and this is just human nature, right? When the market's down a lot, you want to sell, not buy. And so I need somebody who's looking at it unemotionally and objectively until really learn more the psychology of investing.
No, for sure, and that's a great point as far as like how so much of this is behavioral, not necessarily the numbers around things. What are but let's coming back to a couple more numbers. Are there any financial metrics that businesses track that maybe more individuals should work on track?
I
And
would
if not,
say,
yeah.
Yeah, I was just trying to think through all the financial statements and everything. But I think as an individual, I think you really want to look at money coming in versus money going out. So how much are you keeping? And I think the easiest way to do that without nitpicking over a monthly budget is how much am I putting into savings? So what percent of my monthly income's going to my 401k, my kids' 510s, some other investment funds that maybe my financial advisor is running, and then how much money do I want to give to charity? And then you kind of look at what's left and at your monthly expenses, and does that make sense? That's kind of how I do it. So I
Yeah, no,
start, I do the top two first, and then it's okay. How much money do I have left? Because yeah,
well, I think that's important to hear because obviously somebody who's, working with high level businesses, these are kind of simple concepts, but not always easy to execute. And having, a plan in place as far as your hierarchy for where your funds are going, whether it's a business, whether it's your personal balance sheet, your personal cash flow statement, these types of principles, correlate to that. So I think that's important to hear. But with all that being said, and you kind of hinted on it, you in your opinion, what is more important, knowing your numbers or understanding your behavior around?
I think probably understanding your behavior around money is more important because you can know the numbers, um, but it might not change your behavior unless you have no money and you've run out. Then it does. But otherwise, I think just creating just good habits of saving, giving, figuring out what. I always look at I spend money on my kids. I view that more as an investment than just spending. And so what I actually spend money on, I don't spend a whole lot of money on clothes. I just don't think that's a good investment. So I just don't, but I'll spend a lot of money on my kids, education or, you know, allowing them to do sports so that they have options when they grow older and, want to, know what they want, and finally know what they want to do. They have those options. So that's really what I focus on.
I think that's amazing. It sounds like, again, a values-based approach, right? Like, you really value making sure your kids are taken care of, that they're set up for success in the future, and I think that's how a lot of people feel, and so it's as long as you understand the basic numbers, but then those numbers are aligned with what your values are, then that seems like a good mix to me. And also, just take a quick tour. I noticed that you competed in tennis at a high level, and you mentioned sports. So are there any lessons from the court that apply to managing money or lessons you've taken from that?
Yeah, so it's kind of interesting because I played a lot growing up in college, in my 20s, and then from 30 to 40, I didn't really play. I was living in New York. It's really tough to play. And then when I turned 40, I moved to San Francisco and started playing matches and competitively again. And I started connecting kind of business with the tennis matches of, the idea of, that you've never lost unless you quit, that no matter how far down you are in a set, you can always come back. uh you know Keeping track of the points and strategically playing them, really figuring out where am I in the business or the business cycle, and then working towards that business cycle. So if it's an up cycle, you're making lots of money. A lot of times Q4 is very good for businesses. Don't spend it all in Q1, because you might have to wait another 3-4 months till money starts coming in again. And just creating a really good, for me is important, a really good cash cushion, so that when things are not as good, you're not stressed out, nervous, checking every month whether you can make payroll. It's not a good situation to be in. So having a conservative cash cushion is really, really important.
Oh, for sure, and that's an interesting point you bring up because we talk a lot about that in financial planning. Obviously, like having a basic amount of living expenses, whether it's 3 to 12 months, depending on how variable your income is. What kind of approach do you see these business owners taking as far like I don't know as far as most companies and businesses like what does that look like for their cash position? Is it amount of their fixed expenses? How do they think about doing that?
Yeah. Different business owners and founders have different psychologies. So some of them like living on the edge, and they like kind of, like massive investing, bouncing along the bottom, kind of raising money, letting it draw down, raise money, let it draw down, and they're very comfortable with the risk. But I think in general, I think you want to have at least 6 months of cash cushion, and that looks different for a nonprofit and a for-profit. With the for-profits, you'll have revenue, and the thing to remember is, expenses are certain, revenues are not. Revenue can, revenues can go down 30% very, very quickly, but your expenses, what those are. So you really need to have a 12 to 18-month rolling cash flow forecast of what it's going to look like. And especially these days with the economy much more uncertain, it would be very wise. And I'm working with a lot of my clients to do scenario analyses of, if revenues are down 10% for the year, 20%, 30%, how does that impact my expenses? And if it makes a big difference for cash in October, should I be cutting expenses today? Right. And I think, and, personally as well, is there a risk of, not getting a raise, not getting the bonus, not getting that income that I expect? Where should I, maybe, you know, take it easy on expenses, or, increase the cash that's in my bank account, so that if something does happen that's unexpected, the money is there.
For sure. And I guess, one of the things that I see with, business owners, not of, startups or things like that, but maybe they're just self-employed or have a small business, is that balance between how do I, kind of extract profit and kind of diversify outside of that business versus reinvest in that business. Is that something that, you have to confront as well, as far as, how much you're paying yourself versus reinvesting?
Yeah. Yeah. I think most founders reinvest everything into the business. That's very common. You have to make sure that the business works, but it's really important that you also build your retirement funds and investments. And that can look, it can look differently. It's diversifying, right? It's, let's do the 4K, let's do equities, maybe some bonds, but also look at, what does real estate look like? Do I own my own house? Should I buy an investment property if you have enough cash? And should I do some angel investing, for 10 years out, that some money might come in? There's lots of different ways to invest cash, and I think diversifying is probably the best way.
Yeah, because it's interesting in these type of situations. I'm working more with people who are on kind of that linear path, right? That maybe they work, they're a W-2 employee and they're trying to live below their means, and they're trying to translate their income into assets slowly over time, so that hopefully they can achieve some level of, financial freedom or retirement, right? In these situations, it seems more like you are looking for potentially that, like, exit liquidity, where you're, putting all your time, money, effort into it, reinvesting, and then you're hoping that at some point that's going to translate into a liquidity event. Is that accurate?
Yeah, I think so. I think, that's where that's kind of the entrepreneurial risk, right? Where if you're an entrepreneur, you're probably more of a risk taker. So you feel like that is the best investment, is investing in yourself, even though you're kind of putting all your eggs in one basket, because if it doesn't work out, you lose it all, right?
Right. Yeah, I mean, for yourself personally, I mean, like, what led you to start, Vanreusel Ventures, and, take that entrepreneurial risk for yourself?
It was a desire. I'd had, I've only, the Vanreusel Ventures is really my third job. I've only had two other jobs in my life, and they were great, but each time I felt like I just hit a lid. And starting my own company, I feel like I'm not hitting a lid. There's always something else I can do, a different way to grow, new challenges. And I think that's really what interests me the most about being an entrepreneur and having my own company, is there's no lid. There's just, you can make as much money as you like, you can take as much risk as you like. So you have the upside, but the downside's there as well if things go wrong.
Yeah, definitely a ton of accountability there as far as, like you said, I talk to people about this too, is like, hey, how can we uncap your income, right? Even if you are working in a W-2 role, it's like, is there, like, sales is a good opportunity where you can uncap your income and your effort is somewhat tied to your income, right? But, you know, when you're self-employed or a business owner, you have nobody to blame but yourself. But you can always you raise the ceiling on how much you can make, which is great.
Yeah. Yeah. And I think, what you learn as an entrepreneur is as an individual, you can only make so much money, right? And the only way to make more money is, you're leveraging other people's time, and knowledge. And I think we talked about AI earlier. I think AI is really gonna help, small companies be ridiculously successful. You don't need to have 100 or 1,000 employees. You'll have 10 employees doing the work of 100. Right. And I think the great example is, I think it was WhatsApp that was bought by Facebook. It was $1 billion in sales and they had 10 employees. Right. And that was years ago now. But I think, I can see that being kind of the model of the future as AI takes hold.
Absolutely. I mean, it's leverage, right? You have an army of robots at your fingertips, and it kind of just comes down, do you have that judgment to put the pieces together? And in some way, a lot of people are feel fearful of losing, their job, having it automated away by AI, which I'm sure that will happen in many cases. But at the same time, it's going to give opportunity, and I think maybe lower the barrier to entry for a lot of people to build great new businesses with very little overhead because you're going to have, again, this army of robots at your fingertips.
Yeah. Yeah. Exactly.
So let's say money was no object for you. What kind of business would you start tomorrow and why? Or would it be just what you're doing right now?
It's a great question. Not sure. I mean, I love what I do right now. I'd love to do a couple of other things in my life, most likely. But yeah, I think the bottom line is, and what I do a lot through finances, I just help a lot of people and a lot of companies, and I would say most, if not all, of the companies have some kind of a mission, a social mission, to help people, whether they're nonprofits or for profits, and that's very attractive for me.
Yeah, talk to me a little bit more about that because, I think a lot of younger people are a little skeptical or they're cynical about, capitalism and kind of where it leads to. And I guess, do you think that, and this is kind of taking a big turn, but just like the system of capitalism that we operate in currently, is that conducive to kind of good long-term outcomes as a whole for society or for the world?
Yeah. I have always been attracted to companies that, that benefit society and people. And I would say, most companies do. If you're building iPhones, the iPhone's very, very important for everybody. Um, but you're only building a piece of tech, right? So it might not be as attractive. But anything, yeah, anything where I feel like the CEO really wants to help people, and they're not starting the company knowing that, hey, if I build this product, I'm going to get an exit in 7 years and I'm going to make 100 million. Like, those are typically not nice people to work for and work with because they're really only focused on making money, regardless of, does the product help? And, am I helping the people that I'm touching during those 7 years, but if you can build up a portfolio of clients, or you're working with one company, but they're touching millions of individuals and it's helping those people, then I think, as you work longer and longer, 2 decades, 3 decades, you can actually look back and say, wow, if I count the number of companies that I've worked with and the number of people that they've touched, you might have helped millions of people that you'll never meet. And all the hardship and the frustrations of work, you'll kind of say, okay, maybe it was worth it.
That's the hope, right?
Yeah.
Yeah, and I can imagine, right, that people with a why, right, a good why behind it are probably gonna end up being more successful in the long run because that's gonna help them push through those tough times, and if they're just going after the money, then maybe they're not gonna make it or they're not going to yeah, just have the it's hard probably hard to assemble a team, right, if they're not buying into the
Yeah.
CEO's vision,
Yeah.
right?
Yeah.
Um, alright, let's take a little turn here. If you could give your 25-year-old self one piece of financial advice, what would that be?
So financial advice that I didn't do, maybe.
Or that you did, I mean, anything around mindset or just,
Yeah.
thinking
I mean, yeah, I think just any advice is, work with really, really smart, good people. And I think over the last 25 years, 30 years, the better the people that I've worked with, the more successful I've become. And I was reading a blog a couple of days ago, where this individual was saying, don't go out and hire like super expensive executives, right? Don't go hire a full-time CFO for $500,000 a year and bonuses and everything, but hire that person for 2 days a month. And if you need to, hire two CFOs for 2 days a month each, because that's all you really need, and you can make up the rest with other individuals because you need that really high level of thinking and strategy to be successful. And I think my experience has definitely been in line with that. That I would rather spend more money working with really, really smart people who have connections and can really guide you the right way for fewer days than just hiring lots of individuals who are, maybe younger, not as experienced. You have to coach them a lot. Um, and you need of course you need a balance, but I think not shying away from spending money on those really smart people, because it really, really makes a difference. I think it's one of those 10x factors.
yeah, that's something that I've tried to push myself on is, I've been a little reluctant to kind of like delegate or just like, reinvest in outside help, whether that's because I've just been self-sufficient my whole life. I like to do it myself. I like to be in control. But you find that ends up holding you back. There's a saying, it's like if you want to go fast, go alone. If you want to go far, go together. And it sounds like that's kind of what you're saying, right? Surround yourself with good people, be willing to pay for,
Yeah.
premium help and expect, a premium job.
And yeah, and I'm still like, you kind of got to swallow the price tag, but don't be scared of paying somebody $500 an hour for 2 hours, 3 hours a month. It's going to be so worth it.
Especially if you wanna understand your hourly rate too. It's like, "Hey, I wanna value my time at this hourly rate," and if it's, at or lower especially, that's an even greater opportunity, like you said, to delegate, to leverage, and to make sure that you're able to scale over time.
Yeah.
Is there anything that we haven't talked about today that you think is important for people to know about, what you do or what you care about?
What one thing I think one thing that's interesting, and it's just come up with the markets and everything being very choppy right now. Somebody said this to me when I was 24, right? Your career is a marathon, it's not a sprint, right? And so you really need to look at it in decades, not in years, which, a lot of us do when we're in our 20s, especially. And also, if you're looking to make money, right? If you have a W-2 and you're trying to, how do I squeeze out some extra money to make money? Being patient is so important, because it seems like every 20 years the market goes down significantly, right? And if you can build up cash reserves, make the right investments, could be real estate, and then you just kind of wait it out, right? And then opportunity is going to come your way if you're prepared. But you just got to be patient, and that's, it's very hard to do. And I think that's where, you know paying someone a lot of money who has that experience and can really guide you as to, what should you be doing today, that because they've gone through it all. It's just so valuable.
So make sure that you're thinking long term, is what I'm hearing, that you're working with people who are going to align their incentives with your incentives over the long term. that you are building good habits, right? Regardless of where you're in your career and accumulating assets and understanding that these things take time and that, the habits and principles you build when there are, down markets times, you're going to be able to build and take advantage of that. And I think that's the hard thing for a lot of younger people is that they, because of social media, right? Everybody's seeing what everyone's doing, what everybody has. And also you can obviously fake your online persona. And so maybe people's, net worth or, cash flow statement doesn't actually match up with what they're doing online. And they think that they should be there or have that already. When in reality, people like yourself and who've done it over many years understand what that really takes.
Yeah. Yeah. Yeah, and I don't think, there's a lot of people who, kind of retire in their 50s or they do their exit, but they don't, most people don't really retire. They just say, "Great, now I have enough money that I can go do something else that I want to do." Right? So I wouldn't think about, "Hey, I'm going to stop working." It's really about what's my next thing. And somebody, when I finished working on Wall Street, I was working with an executive coach to figure out what do I really want to do next? And I said, oh, I think when I'm 50, this is where I want to be, right? This is what I want to be doing. And then he said, well, why don't you do that today? I said, oh yeah, why don't I do that today? So that was, that was also one of the impetuses of having my own company. It was just like, why don't I do that today? Why?
Yeah. Yeah, I totally understand. It seems like a lot of people, have certain like scarcity mindset around money, right? Where they want to achieve a certain level of, again, net worth before they're willing to do the things that they really want to do, when in reality, they could do it sooner. And because, like you said, there might be a situation where even if you have this exit and liquidity, you have all this money, you're probably not going to want to sit around and do nothing anyways, right? So the sooner you can figure out what you want to do, the better. And you can probably get there quicker than you think as well.
Yeah, exactly.
Awesome. Is there anything else that you want to leave the audience with today? And if not, where's the best place that people can connect with you?
I think that the last thing is just, do what you love and do it with, the, people you have fun with and enjoy and, take care of your family as well. Don't make your kids into orphans because you're working too much. Because, I have 8-year-old twins, and, they're the joy of my life. So it's really important to, prioritize family over work. And I had it, laid out to me that, um, your life is, 5 different balls and you're trying to keep, you got your health, they're all glass balls, right? Your health, if you drop it, it breaks, right? You can't get it back. Or your family, if you drop it, it breaks. It's very hard to fix, but your job is like a rubber ball. If it drops, it's just going to bounce back and not really to worry too much about it.
That's a great message. Yeah, remember what's important. Remember the things that can bounce back and the things that can't. So great reminder.
Yeah. And, anybody who wants to, reach out, my email is james@vanreuselventures.com. The website's vanreuselventures.com. You can reach me through that as well. I'd be very happy to discuss anything.
Excellent. Yeah, we'll link to that in all the show notes and resources. So and all of the websites as well. James, thank you so much for coming on and sharing your expertise today.
Yeah, it was my pleasure. Had a great time.